What a momentous historic day comes to an end with the Sensex making it to the 60,000 mark for the first time ever. This is history getting created and just such a short span of time. That's how much it's taken really. 3 months, so to speak, from the 50k print to now 60,000 on the Sensex. It's really been mesmerizing, spellbinding, whichever adjective you want to call it. That's what the market is right now at our hands. So while we optically already made it to that 60k mark and we were just 100 points shy of that in yesterday's trading session, the pre-open rates itself indicated that we're going to jump up at that 60k mark on the Sensex and a record high on the Nifty as well. And sure enough, right on opening bell, we made it to that 60k print on the Sensex. It's important to really look back and talk about who has actually enjoyed the large part of the rally. And traditionally, one always believes that it's the FI participation which pushes the market higher. But surprise, surprise, given the kind of data points that we've seen, be it the SIP records for the month gone by or the new demat account openings, it all seems to be indicating that the last laugh to the banks is really what the retail investors have actually enjoyed. So while FII participation sure is crucial and critical, it's not really the only game in town. Having said that, one has traditionally as well seen that even in the roaring and raging bull market, there could be corrections as well, and they could be as steep as 50 to 20% as well sometimes. But looking at the kind of texture of the market right now, it doesn't seem to be the case. Yes, sure, we could see some consolidation come in, but correction seems a little far behind. And that's exactly the opinion that we're getting in from most market men as well as chartists too, who are reading the Nifty technicals as well. But today was not quite the day that we started off trade with, because mid-session you did see the markets actually cool off and cool off quite considerably. So Nifty flattened out completely in trade. In fact, we just about closed around that 17,850 print. We dipped in the red for the mid-cap index. We were down about 7/10. That's how we've shut shop for the day, and we completely flattened out even for the small cap index, which actually got a little choppy towards the latter part of today's trading session, dipped down and then recovered, closing in absolutely flat for itself. And similar was the print in the Sensex as well. We didn't close at historic highs. In fact, just before closing, we even dipped sub the 60k mark, and post adjustment just about made it to that level with a gain of about 163 points coming in. Having said that, the weak performance, of course, has been spellbinding. We've managed to gain for a 5th consecutive week in a row. Real estate really has been the darling of the street and really hot property, literally. It's managed to post its best week since May 2014. That's how stupendous the rally on the Realty pack has been. And of course, there have been other contributors as well, like the media sector, with all the news flow around Z this week. That's managed to gain about almost 10%. You also had the home building names, which held out very smartly. So paints as a category as well did very well. IT as a pack too was holding out after Accenture's bullish commentary overnight.